This video is brought to you by TrueVantage, the leading consultancy for modern business solutions.
Hi everyone, this is Hannah from the True Vantage team. In this short session, we will be discussing the key differences between legacy tax and Suitetax in NetSuite. The goal of this session is to help both functional and technical users understand the real impact of moving to Suitetax, from system behavior changes to reporting differences, so that you'll know exactly what to expect once it has been enabled. Before we go deeper, let us look at the advantages and disadvantages of each system to help you identify which setup fits your organization best. On your screen, you will see a summary table outlining these points. You can pause here to review them in detail. Now that we have reviewed the advantages and disadvantages, let us look at the key differences between legacy tax and suite tax, particularly on how they affect your setup, record structure, and reporting. In legacy tax setup is straightforward but limited. Each subsidiary uses its own tax codes and tax groups, which must be manually maintained. These records determine how tax is calculated on your transactions. If you have multiple subsidiaries, you will often find duplicate codes, one per subsidiary. When you enable Suitetax, the system introduces a completely new set of tax records, all centrally managed and dynamically linked to your subsidiaries. Instead of static tax codes, Suitetax uses tax types, tax registration, tax nexuses, and tax engines to calculate rates automatically based on location and registration rules. Let's go through the most important differences on screen. On the subsidiary level, each subsidiary maintains its own tax codes, often duplicated for similar jurisdictions in legacy tax, while Suitetax offers centralized management. One tax registration can link to multiple subsidiaries and jurisdictions. Suitetax also provides new sections like tax registration, tax nexuses, tax type, tax engine, tax jurisdiction, and tax rate record. Upon enabling Suitetax, NetSuite provisions the following: default tax engine, default tax types, tax registrations for each active subsidiary, tax nexuses for jurisdictions detected in your account. In the legacy setup, tax information like registration numbers and tax items are defined directly on the entity record. With Suitetax, these are managed more dynamically through tax registration tab. This allows you to configure multiple tax registrations per subsidiary. This is a big shift for companies operating in multiple regions. On the item record, legacy tax relies on static tax codes, while Suitetax introduces tax schedules, which are more flexible and jurisdiction aware. This allows NetSuite to assign taxes more intelligently depending on nexus and product type. For transactions, the legacy module shows tax columns inline, and users manually select the tax item. With Suitetax, you now have a dedicated tax details tab and a preview tax button that calculates tax in real time based on logic and configurations. This adds transparency and automation. Enabling Suitetax also means saying goodbye to some legacy records. Old tax pages like tax control account, tax period, and tax reports are no longer available. That's because Suitetax restructures how tax data is stored and reported. Migrating to Suitetax requires planning, testing, and coordination across your finance and IT teams. Before enabling Suitetax, NetSuite will display a warning saying that this is a one-way change, and once this has been activated, you cannot revert to legacy tax. Once Suitetax is enabled, the framework becomes record-driven instead of code-driven. Tax configuration is centralized. Each tax engine handles calculation logic for all subsidiaries, and every transaction now stores a line-by-line tax breakdown for transparency. Because of these structural changes, it is strongly recommended to test everything first in Sandbox. Because of these structural changes, it is strongly recommended to test in Sandbox first. Your existing tax codes will remain visible, but they will no longer drive calculations. Instead, Suitetax new records will take over. For implementation teams, it's critical to review your safe searches, scripts, and integrations to reference the new fields such as tax details, tax type, and tax registration ID to ensure reporting continuity. SweetTax was gradually rolled out starting 2020 and became the default for all new accounts since version 2021.1. This makes sandbox testing and readiness checks more important than ever. Moving on to the SweetTax reports. With SweetTax, all localized tax reports are now available through a single Suite app, which will be achieved once you have installed the Tax Reporting Framework bundle. You can generate all these reports from one page, the Country Tax Reports page, instead of navigating multiple menus. This gives users flexibility thanks to the editable tax return templates, making it easier to adjust reports to meet specific jurisdiction requirements. One thing to note is that prerequisite bundles must be enabled first. For a quick view, here are the list of bundles needed to be installed for each country tax report. To summarize, SweetTax brings automation, flexibility, and global compliance to NetSuite tax management. It's the strategic direction for all new environments, replacing the older legacy tax model. If you are still using legacy tax, plan your migration carefully. Test configurations, coordinate with your finance team, and validate all reporting outputs before enabling SweetTax in production. At TrueVantage, we help clients through each stage, from sandbox setup to post-migration validation, ensuring a smooth transition. Thank you for watching this short session. Don't forget to explore TrueVantage for more quick training videos.